So Washington and Beijing reached this 90-day trade truce, under which they're reducing their massive tariffs that had been imposed after President Trump's so-called Liberation Day. The stock market has rallied, and we've seen some big Wall Street banks, such as JP Morgan and Goldman Sachs, dropping their recession calls. Let's get more, though, from Stephen Roach, Senior Fellow at Yale University and former chair at Morgan Stanley Asia. Thank you very much indeed for joining us, Stephen.
Pleasure to be with you.
So we have this truce, but you say we're still going to see business investment decisions crimped because of the uncertainty. So we're not out of the woods yet.
Well, think about what's going to happen during this 90-day truce. Trump is going to be signing executive orders almost every day on one aspect of the issues bearing down on U.S., China, and other aspects elsewhere in the world. He'll be cutting deals with countries like Syria and his other friends in the Middle East, injecting a huge amount of uncertainty into the decision-making horizon that businesses need to think of when they make these key decisions about expanding capacity and hiring workers. And uncertainty is the enemy of decision making. Mm-hmm. And so these decisions are going to be put on hold, and that's going to have a negative impact on the economy.
For both America and China, you think this will damage Chinese economic growth as well?
It's more of a problem in the U.S. because we have more of a market-driven system, whereas China is more state-directed. But China's still got big issues in addressing the downside of an external shock from the United States. It's an export-dependent economy. Its largest foreign trading partner or external market is the United States. So China is certainly not off the hook in terms of its own economic prognosis.
If putting yourself inside the head of the Chinese leadership, what is their big priority here in this trade relationship with the U.S.?
Their big priority is coming up with a new source of growth, and it's not something you can do easily. They've got a well-known agenda of structural problems, the underconsumption and the high debt and the lingering property crisis. They are trying to push exports into other nations. The latest trade numbers that came out of China for the month of April indicated a sharp plunge in exports to the U.S., but a big increase to other economies in Asia. You have to wonder how long they're going to be able to do that and at what cost to their economy that will entail.
And you know that the Vice Premier, He Lifeng, he's been around Chinese industrial policy for years. The Chinese in underconsumption simply means that consumers are saving too much?
Well, the story on Chinese consumption is it accounts for less than 40% of the Chinese GDP. Compare that with excess consumption in America, where our number has been fluctuating 65 to 70%. We save too little. They save too much. Mm-hmm. They save too much because they're fearful of an uncertain future, in particular as they get older, and they're doing that rapidly. And they don't have a social safety net that supports them in terms of health care and retirement. So yes, the incremental income generation of China goes much more into saving than into spending.
I suppose they had that one-child policy, so some of those little princes, the spoiled boys, now find themselves looking after two aged parents. So that's another demographic factor. Just talk to us about the fentanyl. Is that just a red herring? Or, I mean, sure, some precursor materials come from China. Is this largely rhetoric, though, this alleged flood of opiates into America?
No, I mean, it's clear that there's a lot of fentanyl coming across the southern border. Trump at one point tried to penalize Canada for that. And China has actually been focusing on its piece of the fentanyl production line by addressing the so-called precursor chemicals that go into the composition of the drug before it is produced and then distributed in the United States. But let's not kid ourselves. I mean, some supply doesn't just spontaneously exist without a demand problem, and we have a real demand problem in the United States for drugs like fentanyl, and that's on us to address as well.
Stephen, we better leave it there. Thank you very much indeed for joining us.
Great note to end on. Thank you.
Stephen Roach, Senior Fellow at Yale University and former Chair of Morgan Stanley Asia.